By most measures, the economy is in solid shape, but key risks are emerging for retailers in the new year. Here to break them down, we've got our own senior reporter, Brooke DePalma, here with us in studio. All right, Brooke, so what's up? Some cold water to start 2025?
Only January 2nd, and we're already hearing about some potential risk here. We know that it's a fairly healthy consumer heading into this new year, but one key risk is the possibility of port strikes yet again set to hit next week. If you remember back in October, everyone was worried about those bananas, but the International Longshoremen Association and United States Maritime Alliance reached an agreement that increased their pay by roughly 60%, and then it seemed like negotiations ended. But we now know that there is one key issue remaining on the table. That was a tentative agreement that was up until January 15th. That one key issue remaining is workers seeking protection against automation. So negotiations are set to resume on January 7th, leaving roughly 8 days before that January 15th deadline, and also right ahead of Trump taking office yet again on January 20th. Now, retailers are keeping a key eye on this. In the last quarterly earnings from Target, we did hear from the CFO there saying that their team took decisive action to route select shipments to West Coast ports. This came at a cost, but allow us to be well positioned for our guests through the strike and into the holiday season. The strike was short-lived. They said they'll continue to watch until January, but that did end up hitting their earnings last quarter.
Brooke, we got about a minute left. What are those other two risks?
Two risks here include the possibility of those tariffs from Trump. We know that he plans to impose an additional 10% tariffs on imports from China. We also know the possibility of 25% tariffs on imports from Mexico as well as Canada. Of course, it's a matter of if he does that. We know that will impact mostly discount retailers, think Dollar General, Dollar Tree, as well as Five Below. In addition to that, we continue to see the third risk here, a value-oriented consumer. Now, that's good news for companies like TJ Maxx, Ross Stores, Burlington, but it is bad news for those department stores who are struggling to get consumers in, and they also want consumers to pay full price. This consumer is going to Walmart instead. They're really seeking out those value and convenience of these key players here.
All right, Brooke, thank you as always for joining us. Amazing breakdown. We appreciate you.